Good morning. For the record, my name is Tania Fernandes Anderson, District 7 City Councilor. I am the chair of Boston City Council Committee on Ways and Means. I am joined here by my colleagues, Councilor President Ed Flynn, Councilor Bach. This hearing is being recorded. It is being live streamed at boston.gov/city-council-tv and broadcast on Xfinity Channel 8 RCN, Channel 82 Fios, Channel 964. We're here to discuss an order relative to the adoption of classification, which speaks to the tax classification that the City of Boston will utilize for fiscal year 2023. Every year, we must determine the percentages of the tax levy to be listed under each property category for the upcoming fiscal year. These categories are residential, commercial, industrial, or open space. Personal property is treated separately and is excluded from this classification. State law requires that all property be assessed at all full market value. Taxpayers can save considerable sums of money due to classification. I don't want to take too much space, and I'm hoping that this is pretty straightforward. So I'll allow my council colleagues to make a statement, an opening statement, and if they have any questions after you present, happy to hear from you today. I just want to acknowledge that our speaker today, or the panel, is Nicholas Ariniello.
I think you pronounce it better than I do. Yeah.
Oh, thank you. Commissioner, Assessing Department. Very nice to meet you in person. Councilor Flynn, you have the floor.
Thank you, Madam Chair, for the important work you're doing. And Commissioner, it's always great to see you and work with your dedicated and professional team. I wanted to highlight something very briefly, the importance of this discussion, but also how the taxes, how property taxes really impact residents in the city, but especially residents with limited income, residents that might be on a fixed income, or seniors, persons with disabilities, also families and veterans. But we want to make sure Boston is a city for everybody, not just the wealthy, but for working families and people not making a large amount of money. They might live in a $1 million home, but doesn't mean they're wealthy. So just want to continue working with you and your team, making sure that Boston is a city where everybody has the opportunity to live here, especially working families, persons with disabilities, and our seniors, veterans, and also making sure that we also include the business community and acknowledging the important work they play in our city as well. And that includes their taxes, but their taxes, like residents' taxes, it goes to schools, it goes to supporting people in need of food access. So just want to highlight the important role the business community plays in our city. So thank you, Commissioner, and again, thank you to the Chair for the important work she is doing.
Thank you, Council President Flynn. Councilor Bach?
Thank you so much, Madam Chair, and thank you to the assessor for being with us. I want to echo Councilor Flynn's remarks. It's, I think tremendously important that even as our families are building equity with the homes that they own, the really key thing for so many families is that it anchors them here in Boston. And so making sure that that the tax liability is one that people can afford to pay is really important. And I'm grateful, the assessor's got a memo here that kind of lays it out, but even the existence of classification and the residential exemption is really due to the work over many decades of the residents of Boston advocating up at the State House with the support of this city council and the mayor. And I know that goes back to the 70s and 2004 and 2017. And so just, want to recognize that this is this is work that remains as important as ever, but that, you know, the people in Boston and in this chamber have been involved in for a number of decades to help keep our residential communities stable. And then just to say that, you know, I think President Flynn alluded to the importance of the business community. The reality is that the flip side of classification is that while we make it more doable for our residential taxpayers to stay in the city, it does shift more of the burden onto our commercial tax base. And so it just really underscores the reason why it's so important for us to make sure in the wake of COVID that we're bringing folks back downtown, that we're supporting, you know, that commercial real estate value as well, because of the ways in which the city's budget and all of the important things that we fund are dependent upon it. So really just, you know, this is kind of one of those, we do it every year, but it's quite a key hearing and order, and so grateful to the chair for sponsoring it this year, and thank you so much for being here with us. Thank you, Madam Chair.
Thank you. For the viewers at home, written comments may be sent to committee email at ccc.wm@boston.gov and will be made part of the record and available to all councilors. Public testimony will be taken at the end of this hearing if anyone shows up or online. If you wish to sign up for public testimony here in the chamber, I see no one here, but if you do show up and you're watching, please sign up at the door. If you are looking to testify virtually, please email Shane Pack at shane.pack, just PAC, at boston.gov for the link, and your name will be added to the list. Today's hearing is on docket 1386, order relative to the adoption of classification in the City of Boston fiscal year 2023. Commissioner Arenello, we would love to hear from you on this docket. You have the floor.
Thank you so much, Madam Chair, and good morning to you, and good morning to you, Councilor Bach and Councilor Flynn. Really appreciate you having me here. I'm here to testify on behalf of the administration. For the record, my name is Nicholas Arenello. I'm the Commissioner of the Assessing Department. I'm here to show my support and the administration's support for docket number 1386, the order for classification. This is an extremely important process that is not automatic, and it's something that the council has to act on every year, and the administration also has to support every year. And it has historically provided a huge benefit to the residents of the city and our constituents. There are two components that are a part of this docket. The first component is the classification component, and what that in essence does is shifts some of the tax responsibility from our residential taxpayers to commercial taxpayers. Last year, for fiscal year 22, electing to maximize that shift saved residential taxpayers approximately 24% off of their tax bills, which is a significant savings. The second portion of the order relates to the residential exemption. Residential exemption is a program that, last I checked, I believe there are 14 communities throughout the Commonwealth that had a program of this nature. So it is not something that is automatically given to every resident or that's available to every resident throughout the Commonwealth. Municipalities have to elect to participate in the program, which is what this order is doing for fiscal year 23, hopefully passes. Historically, Boston has been a very strong advocate of the residential exemption program, and in every year since its existence, Boston has elected to maximize that exemption. What that would mean this year is approving 35% exemption program, which is the maximum allowed by law. Last year, under that same election, that generates significant savings for our taxpayers. And the residential exemption program is also a program that takes our real estate taxation system, and it really changes it from a flat system that applies to everyone across the board equally to a progressive system where the benefit is really felt by residents with lower value properties. So for example, last year, home that was valued at $350,000, the residential exemption alone generated 87% in tax savings on their bill versus not having that program available. And then when I say it's progressive, so a home that was worth $650,000 still got a significant savings from the program, but it was 47% tax savings. And so that the way the program is structured, in essence, is that the benefits accrue to lower valued properties, and it shifts some of that burden to higher value residential properties. And so that's how the program is funded. So it's funded through the tax rate system itself. And so those higher value properties are helping sustain the lower value properties and keep those costs down. That's really all there is kind of to it. There's not too much else to say, but I'm here if anyone has any questions or there anything else that I can help with. Oh, and also I should add, these programs are both in addition to the other exemption programs that the city offers. So exemption programs for veterans, exemption programs for the elderly. There are also opportunities for people to reduce their taxes.
Thank you, Commissioner. To my council colleagues, would you like to go first with your questions? Councilor Flynn?
Thank you, Madam Chair, and thank you, Commissioner, again. So I know we've talked in the past, Commissioner. Can you explain for the audience that are watching on television, can you explain what the assistance program is for seniors as it relates to doing some volunteer hours? What is that program all about? How would they get involved in it? And it's an opportunity for them to kind of reduce their property tax by working a certain number of hours. Can you give us a little bit of background information on that, please?
Yes, sir. Thank you for the question, Councilor Flynn. So one of the programs that's available through the city is called a senior work-off program. That program is administered by the Age Strong department. And so the application process goes through Age Strong. And in essence, let's see if I can summarize it quickly without screwing up too many of the details. In essence, the program allows seniors that meet income eligibility to work for the city at a rate that I believe is approximately the minimum wage in order to reduce their tax liability. So instead of us paying the seniors directly, they get credit hours that then get applied to their real estate tax bills. And so it's a really great program, and it's a way for kind of the city to benefit from the knowledge and experience of our senior residents who might not want to be working full-time, but maybe are still interested in a little bit of a tax break. But then also the city really benefits from that experience that they can kind of contribute.
Thank you. Are we able to do a better job in terms of publicizing that program, maybe working with district city councilors, working closely with Age Strong, with your team, but letting residents across the city know about the program, how to access the program, the benefits of the program, and steps that they need to take if they are interested in that? So I would like to see kind of a more robust educational outreach to residents, seniors, about the program, and maybe they might be interested in here's the contact information.
Thank you, Councilor. I think that's an excellent point, and I think all of our exemption programs, you know, the city does try and get as many people involved in the programs as possible that are eligible, because that's why the programs exist. We don't want them to just kind of sit and be unused. And I think that it's definitely worth exploring kind of more opportunities to strengthen outreach and across the board for all things. But I think, you know, for this program, that's definitely something that's worth talking to Age Strong about, and maybe we can kind of set up some maybe community meetings or something if that would be kind of a useful way to proceed. We do a lot of outreach now through mailings, and mailings get sent with tax bills, and I know Age Strong and Assessing, we both go to community meetings, but that doesn't mean that we can't go to more. It's one of the challenges of our programs is trying to figure out how to actually connect with residents and make them know that these things are aware.
Okay. And my final question is similar to that, but the mayor's office, I know my district councilors are working on the City Hall truck to go. I'm actually doing one tonight in Tai Tung. But those types of opportunities are a great way to promote that type of program. Also, these opening of streets where city services are present, closing of streets rather, and opening them to the residents. But being more engaged, doing a robust public outreach on it. So my final question is, and again for the audience, tell us about the exemption program for veterans. Give us the ABCs of the program, and I also want to ask if you'll be more engaged and active in working with Department of Veteran Services, and I know you have been, in the same manner promoting that exemption as well. But give us a little bit of background information on that program that assists veterans.
Yes, sir. So I agree that the Veterans Program is another program that it harms no one, honestly, for us to continue to try and strengthen our outreach and make people aware of these programs in every creative way that we can think about. And I have had conversations with Veteran Services to try and figure out new opportunities for that other than just sending things with tax bills. Mm-hmm. And so the current programs that we have for veterans exemptions, there are actually a few different ones that all kind of fall under a similar bucket, but that allow different amounts of relief depending on what category you might fall under. So we have a program for surviving spouses of veterans. There's an exemption program that addresses that. We have a program for veterans who received the Purple Heart. There's a program for surviving spouses specifically of World War I veterans. There's also a program related to veterans who have been injured during their service. That are the kind of criteria is related to their disability level. And then there's a program for paraplegics. I might be missing some. The best way for people to get information about all of these, because there are just so many details and there's so much nuance to each program for the exemption criteria. And so the best way for people to get information is to either go to the boston.gov/assessing website, where we just revamped a whole bunch of web pages to try and make it easier for people to access the information about these programs and to make it easier to get brochures. But also, people should really feel free to give a call to our taxpayer referral and assistance center, where we have staff specifically available to kind of walk people through the exemption programs and help them understand kind of what they might qualify for and what the criteria are. And so the phone number for that is 617-635-4287. So that can be the easiest way. If you want to talk to somebody, that's the easiest way. If you want to just go to the website, that's also viable. But there is a lot of information out there. And while we are trying to make it easier to access, sometimes the easiest way to kind of get to where you want to be is to talk to one of our staff members so they can walk you through. Because they have the experience with the programs, and sometimes these things get complicated because constituents might think there's something that's available, but tax law is weird. There are lots of rules and ins and outs. And so really encourage people to kind of reach out to our department to get those answers and help figure out what programs they might fit into.
Thank you. I have no further comments or question. Maybe one final point, and you don't have to respond to it, but could we possibly, down the road, update veterans of World War I to veterans of Operation Iraqi Freedom, Operation Enduring Freedom, Iraq, Afghanistan, but the World War I veterans are deceased, but could we move forward and try to include the younger veterans? Vietnam veterans are in their 70s. Certainly we want to support them, but we also want to support the returning veterans that are much younger as well. But just something to think about. Thank you, Madam Chair.
Thank you, Council President Flynn. Council Bob?
Thank you, Madam Chair. Commissioner, I was wondering if you had to hand what the actual rate per 1,000 square feet will be, is this year or will be. Maybe you can't formally say what it will be in January because it hasn't been set yet, but just if you could remind us where it is.
Sure. So the current tax rate for fiscal year 22, so this past year, so the last tax rate that was approved, is $10.88 per thousand for residential property. And then because of classification, it was $24.98 per $1,000 for commercial property. My department's currently in the process of finalizing values for fiscal year 23 and getting approval from the state on those values. And the actual final rates for this year are also dependent upon this hearing and the council vote on classification and on residential exemption. So I don't have final numbers for fiscal year 23, but I have a whole bunch of other years.
And I was going to say, do you have the FY21 numbers with you?
Sure. So for fiscal year 21, the residential tax rate was $10.67 per $1,000 of value. And the commercial tax rate was $24.55 per $1,000 of value.
And as I recall from last year, we discussed the fact that even though we're taking the maximum split, that you have that slight increase in residential, decrease in commercial because residential property values are going up so much faster than commercial property values.
Yes, that's correct, Counselor. So because of the split tax rate, the statutes that allow us to shift some of the levy burden cap how much we can shift. And so because we've been at the maximum for that shift, when the relative value of residential property increases at a faster rate than commercial property, it can increase the residential tax rate as opposed to the commercial tax rate, and the commercial tax rate can go down a little bit. So last year, comparing 21 to 22, both tax rates actually increased. But I have a whole bunch of historical data, which is also available on our website for anyone that's interested, going back to 1993, and you can kind of see how the residential and commercial tax rate have gone up and down over time and kind of flow. So right now, the last time the tax rate was higher than the current rate was 2016. The residential tax rate was $11. And it's been below that point for the past 6 years or so.
Got it. Yeah, and I, would just say that I think we discussed last year the fact that at some point, if this trend continues, we probably need to go back to the state and talk, about is there a way to do something else to pad the residential exemption at some point? But obviously that would take state law action. And then I just also wanted to say, sort of dovetailing on Councillor Flynn's points, that I know that we had talked a lot last year about trying to make some of the programs that we have for seniors in particular have a wider eligibility for more seniors. Not the work-off program, but the one where you actually get money off. And so I just wanted to thank your office for kind of proposing something that I know went into that home rule petition along with the transfer fee that's up at the State House. I think obviously at this point don't really expect to see action on that this year. But I hope that that's something we can all continue to push in the new year, because I do think that right now the trouble is that the income levels are so low in that law that most of our seniors on fixed incomes, even the ones who have very tight budgets, don't qualify. And it just feels like we need to work with the state to fix that. So thank you guys for proposing something on that front.
No, of course, Councilor. Thank you.
Madam Chair, that's all my questions. Thank you.
Thank you, Councilor Buck. In 2021, this exemption saved about qualifying homeowners $2,879.79 off their tax bill. Can you speak a little bit more to who qualified?
Sure. So for the residential exemption, the qualification criteria is related to ownership and occupancy. So there are kind of these two main components that get reviewed. And so ownership is checking to see if your name is on the deed for the property at the Registry of Deeds. So that's a relatively easy check for our office to do. And then the second step is verifying residency. And so the way that we verify residency is an initial check based on where people file their state income tax forms. And then if they don't file state income tax forms, we do some secondary checks through documentation that we request to see if there's another avenue that we can verify through.
Thank you. And as homeowners, are they readily made aware of this program, or is it just something that you automatically get, I don't know, you have to search it out, or how do you learn about it?
Yeah, so I believe that a lot of real estate brokers tend to tell people when they're looking for homes that the program is available, but we don't rely on that. That happens to be a way that I know that information gets out. The way that we actively send out information is we have a bunch of data available on our website. We also, every year when we send the third quarter tax bill, we include like a FAQ with that explains a bunch of programs that are available.
Sorry, FAQ?
Frequently asked questions. My apologies.
No worries.
That kind of lists some of the current programs that are available, encourages people to call the department to either get an application or talk more to see whether they might be eligible. Another thing that the department does is we proactively, anytime we see a property transfer, we proactively send a residential exemption to that property in the fall. So like this past August, September, early fall, late summer, early fall. We mailed out a bunch of exemption applications to properties that had recently changed hands before the qualification date. One thing that I forgot to mention is that there's a qualification date for the residential exemption, and so it is one amount that you get. It doesn't get prorated throughout the year, but it's related to whether you were the owner and occupant on July 1st before the start of the fiscal year, if you've just newly acquired a property, or January 1st before the start of the fiscal year if you've owned the property for a few years but then decide to move into it.
Thank you. This is a wild question. Is there anything like this or similar for renters?
There is not a similar program for renters. There's a similar program for owners in cooperative housing buildings. So shareholders in cooperative buildings, there's a similar program, but there is not, and that also has different qualification criteria, it has different application deadlines, so that program, if anyone at home is interested in that, I strongly encourage you to give a call to our Taxpayer Referral and Assistance Center.
Sorry, what's that program called again?
It's the Cooperative Residential Exemption Program. But there's not a similar program for renters.
Do you recommend the rate stay at 35%?
Yes, I would recommend that we continue to maximize the rate of the residential exemption and have that be a 35% exemption rate.
not increase?
It's currently the highest amount that we can have by law.
Right.
I have not looked into kind of the impact of getting that law changed.
Thank you. What of commercial and industrial property? Do any benefits at all accrue for the owners, or is it just for?
No, these programs are both for residential property.
I'm out of questions. If we have any final statements, Councilor Bach, Councilor Flynn? Well, thank you so much, Commissioner. Appreciate your time and your work. This hearing is adjourned. Thank you.
Thank you.